Good morning, everybody. Welcome to the Moving Markets Podcast. It is Thursday, October 16th, 2025. At the time of this recording, the U.S. stock market has been open for, let's call it 2 hours and 20 minutes approximately. That's so just a couple hours, 2.5 hours or so that the U.S. stock market has been open. Already on a Thursday, we've had quite a repeat in a way of what we've had going on for the last several days. I feel almost like we're going to be talking, I could spend time talking about exactly the same thing I talked about in yesterday's podcast, where you've got these two competing groups of traders and investors, one that are just completely glass is half empty people, and one that is completely, glass is half full people. The Dow Jones Industrial Average right now is down a little over 280 points, but at the beginning of the day, it started to the upside. Futures were up. At one time, I think when I first started watching futures about an hour and a half before the market opened, futures were pointing to the upside on the Dow by about 150 points. By the time the market opened, futures were only up about 40 points. They started that high up, kind of wobbled back and forth, all in positive territory for about that first hour and maybe 30 minutes or so, hour and 35, 40 minutes. And in the past hour, it has just been a fairly steady downhill. And again, this is your glass half full people that were sort of controlling things at the open. You had companies like CrowdStrike that were up as much as $8 or $9 a share in the early part of today's trading. And right now, like CrowdStrike, I'm just using CrowdStrike as one example, but they opened today and went up to $498 a share. And now they're trading at $475 a share. I mean, you're literally talking in 2.5 hours, they have seen a $23 range of trading from the high spot to the low spot. In fact, from the highest to the lowest spot, almost $23 range in just 2.5 hours of trading. You've got a company like JP Morgan, which we have an open trade on. At one point in time was up as high as $308. They've been as low as $302. Now, granted, that's only about a $6 range, but still, that's quite a bit from the highest spot to the lowest spot. A couple of the only bright spots in any of the companies that we follow right now are NVIDIA's up about $1 and CoreWeave is up about $1.60. I mentioned JP Morgan already. JP Morgan being down as far as they are is actually a really good thing for our trade. If we take a quick peek at our JP Morgan trade, we're going to see, let me see if I can jump to it real quick. We're going to see that JP Morgan, this hasn't refreshed yet, but the trade itself from where we opened it is actually, it's weird because I still show that overall it is down about 16%. But what's really interesting about that being down is that both the long put and the short put are completely in the money by more than $2 a share. The short put is more than $2 a share in the money, which is well below where we would need to be to not only have our target profit, but actually be our maximum possible profit. But because of this wild, high volatility with the options moves and the stock moves, I still show that it's down about 15%. Now that could change dramatically by the end of the day, because you get to the end of the trading day, if both of those put options are still completely in the money, then it almost has to change. There almost has to be closer to an equal difference in the two option prices as what the two strike prices are. So, it's very, very interesting scenario with JPM where were it not for the high volatility, and the volatility is always, without exception, it's higher in the closer to the money option. So that 305 short put being closer to the money has a lot more value in it right now than it should have. And that's why there's not as big a difference in the option values as there is in the option strike prices. But by the end of the day, and if it holds that way into the morning, that's going to change, and it's going to change very rapidly. So we're looking good on the JP Morgan trade, and looking very, very likely that we'll end up hitting. Yeah, I got to tell you honestly, hitting maybe our full target profit or more. Our Johnson & Johnson trade, that's one of the few companies that's trading to the upside right now, and it's only about, I mean, it's trading in a spot where if it finished right where it's at right now at the end of the day tomorrow, we would be at a bare minimum, we would be break even on the trade. If it goes up just a little bit more, if it goes up just another 25 to 30 cents, we would literally be at our target profit. We could get out of the trade for almost break even right now, but just a little bit more upward movement, and we end up out of the trade with our target profit on Johnson & Johnson. So those two trades that we have expiring tomorrow potentially look really good if they just continue to trade where they're at, or if they go farther in the direction that they're trading right now. Either one, we end up looking in, honestly, really good shape on those trades. And so I kind of like that. Our Apple trade is almost dead break even. That's kind of to be expected. I think one of the most interesting things going on today, and we saw this happen with Goldman Sachs a couple of days ago following their morning earnings report, our Taiwan Semiconductor trade. Taiwan Semi is trading down 1.5% right now, and this is one of those things where absolutely zero, and I mean zero, logic in why this is trading down. If you could ask 100 different people who can, claim to be experts, like literally 100 different people that are analysts or that are experts, and you could literally get 100 different variations of why they're trading to the downside. And if you really thought about it logically, you would be able to honestly say not one single one of those reasons is real, actual justification for why they're trading to the downside. It makes no sense. They reported their earnings this morning, and it was blowout earnings. I mean, they increased their, I can't remember if it's their profit or their revenue. It was either their top or bottom line. They literally beat it by 39, almost 40% up from the same quarter a year ago. Blew out the analyst expectation. I mean, actually crushed the analyst expectation, and they upped their guidance dramatically. And usually it's that guidance statement that is the real tell as to what this company is going to do. So the fact that they're trading down right now it's pure. It is 100% pure contrarian trading. It's people right now that say, well, if everyone else thinks they should be up, I think they should be down, and they're dumping shares right now, and it's just not. It's either pure market manipulation, meaning people with large portfolios are selling shares that they're profitable in to try to drive the price down so that they can then buy a whole bunch more shares. They can get out of shares with 5, 10, 20, 30% profit. And then if selling those shares will drive the price down, then they can load up with a whole bunch of more shares, knowing that this company should be trading to the upside instead of the downside. It's, in my opinion, it's one of those things that is impossible. It is literally impossible to police or control this, because you can't tell someone who trades, someone who sits at a trade desk for a company, that has a lot of money, a lot of assets, somebody who sits there and controls, 20, 30, 50, $100 million portfolio, or someone who controls part of a mutual fund or part of a hedge fund for a much larger company, someone like a JP Morgan, like a Chase, like a Morgan Stanley, or big hedge funds. You take one of those traders who controls so much money like that, and they could have had orders in place a month ago that says, if I bought all these shares of Taiwan Semiconductor at $240, $250 a share, if the day after earnings, or they scheduled it for the day after earnings, sell for anything above 300, because they're looking at that and they're calculating anything I sell for, at three, and I'm being hypothetical on this, anything I sell for at $300 a share or above, I'm going to make a whole lot of profit on. And if I'm driving the price down, then at 290 or 295, I'll load up on a whole bunch more shares, because if everything is in line, I know that this stock should, by all logic, should be trading to the upside, and that's what they'll end up getting. So it's really, again, the only logical explanation to Taiwan Semi trading to the downside today is that there are people who control a lot of shares and are legally, they're doing market manipulation. They're doing things that knowingly drive share value down so that they can take advantage of that. It's really it's why people are sometimes very validated, even though on the surface it may sound kind of conspiracy theorist. People can be very validated in saying that the system is rigged. It's rigged against the little guy, and it favors the big companies and the big brokerages. And there's some truth to that. And Taiwan Semi is proof of that. Fortunately for us, our Taiwan Semiconductor trade, none of our options expire until the end of next week. So I believe, if you look at Taiwan Semi's chart right here, I believe that we have the ability to easily wait this out, because we may get a couple days of down movement like this, probably a move. I think maybe the actual share price, not the 5-day moving average, not the MACD or the RSI. I think the actual price of the stock is going to come down over the next couple of days, sort of bounce off that 20-day moving average, and then we're going to start having that steady march up, which is the more logical thing based on the report that these guys gave. I mean, it was a blowout report. It's like, who would sell their shares of this company after their numbers are that good, unless you just believed that everything in that report was a blatant, flat out lie, which companies don't typically benefit from being completely dishonest about their numbers. So I would say we're probably going to end up in really good shape on Taiwan Semiconductors, because I honestly believe they're going to go up, and they're going to go up strong after a day or two of sell-off. So I'm not worried at all about what's happening right now. I won't push any panic buttons or get stressed about this trade unless we get to Wednesday of next week and they haven't started to move back to the upside at all. So that's when we'll watch. Obviously, our DIA trade is down a little bit today, but we're getting in a spot where we might buy to close those short options, so that the next time the Dow gets on a run to the upside, we're gonna be loving it, and we're gonna be free of short calls temporarily, and then we can add some back on when the long calls have come back up in value. So our other trades on the triple play side of things, Nike down today, but as we continue down, we can roll our short put out again. It doesn't expire for another couple of weeks, and we still have until November 21st before long options expire. We'll end up in really good shape on Nike. I've already talked about the JPM trade. We adjusted Strategy Inc., so we're looking good on that. Taiwan Semi, Johnson & Johnson, and then Texas Instrument doesn't report until the very beginning of next week, and that will probably create, good or bad, that their report is probably going to create a big move to the upside or downside. So again, just like yesterday, kind of a repeat of yesterday, even though these triple play trays look kind of bad right now, these are all going to be dramatically improved just in the next day or two, unless we get this like wild complete reversal. We've got Johnson & Johnson up right now, JP Morgan down. If that just flipped upside down before the end of the day today or tomorrow morning, then we got to look at it and say, okay, we got to make some adjustments. We got to change things here. But I don't see that happening. I think they both end up probably more movement in the direction they're making right now, or they stay wobbly but kind of the same as they're at right now, and then we end up in pretty good shape on both of them. So you'll see probably three of these 5 open trades change pretty dramatically just in the next 24 hours. And we'll end up in really good shape on that. Collar trades, still nothing to do right now on collar trades. We may make an adjustment on Bank of America because they have reported earnings. Left those long puts in place just for a little bit because after a big move up yesterday, they're kind of turning around a little bit of profit taking. They had phenomenal earnings. They should trade more to the upside, but a little profit taking, giving a little bit back today, and that's actually adding some value to our long puts. They've done the same thing as everything else today. They started to the upside, stayed kind of flat through that first hour to hour and a half of trading, and in the past hour, it's been just kind of a steady slide. And it's impossible. This overall slide that is taking place right now, it's virtually impossible to predict right now today. Is this going to reverse? Are we going to be back to the upside today? We've already, just like the last few trading days, we've already been in a pretty big range on the day. We're only an hour and a half, I'm sorry, 2.5 hours. Let's call it three. Let's call it an even 2.5 hours into trading. And wait a minute, let's see, 7, 8, 9, 10. Let's say 3.5 hours into trading. Sorry, I'm off a little bit. 3.5 hours into trading for the day, and already we've seen a pretty good range. Again, from the very top, highest it's been, down to the lowest it's been. That's a much bigger range than any of these days right here, than almost any of these days right here, than maybe all but 1 or 2 of these days right here. This is just, we are in a stretch right here where every day we're seeing big swings from the top to the bottom. Now, yesterday and today, so far today, it could be a lot different before we close, but today so far the range has not been quite as big, but again, that could change so much. Now, one other interesting thing is that barring a move between now and the end of the trading day that goes back to the upside, barring that, we've got our 5 and 20. Look at the 5 and 20-day moving averages moving almost in complete sync with each other now for 5 trading days in a row. Because yesterday was down and today is down. You've got the RSI just barely crossing over to the bearish side, and a few trading days ago, the MACD having run perfectly flat for a full week and a half, 2 weeks, the MACD is finally diverging to the downside. And so if you get a finish to the downside today, that is full. All three of the major technical indicators that we watch will all show bearish now. And to me, that increases the possibility, maybe even the probability, that we come down to that strongest level of support near term below where we've been. And that's almost a perfect pullback to just give us that little pullback we want before we could take off on a really strong fourth quarter bullish run. I know we're already, a couple weeks into fourth quarter, but watch for this market. If we could have, don't be shocked if we get something like this. You could get it kind of holding right here around where it's at right now, even if the 5-day moving average stays below the 20-day moving average for a little bit. Even if it just crosses over barely and maybe kind of holds up not too far from where it's at right now today, that's a very possible scenario going into next week. And then towards the middle to end of next week, you start getting some really big, important companies starting to report their earnings, and you start to get the earnings that are beyond the bank stocks. And when that happens, then you either get, I think, a continuation of this pullback down here, or you don't go all the way down here and you get that bump and that next leg up that resembles closer to what happened back here. So it's right now, it's anybody's guess. I'm not going to pretend to know which it's going to do. I'm giving you the two scenarios that I think are more likely than anything else. But I'm not willing yet to predict which of those two scenarios is more likely to play out. We'll have to see. All right, I'm going to be away from the computer for the majority of the rest of the day, but I will have my phone. I'll be able to look and see where things are at. If needs be, I can jump on Discord and recommend an exit from a trade, recommend an adjustment. I really like where JP Morgan is at right now, and I'm even kind of pleased with where Johnson & Johnson are right now. And those are the two that have expiring options tomorrow. So I think those are the only two that we really have to keep a super close eye on. And if they just kind of stay the course from where they're at, we end up really good on those two trades. So barring a huge shift or a huge change in what one of those two are doing, I think we stay the course on where we're at. In the time I've been talking to you, only a very slight change in where the Dow and the NASDAQ and the S&P are. Those are pretty close to where it was when I started, so no big difference there. I'm going to wrap that up for today. I'll be back on tomorrow, probably to give a wrap up of the week a couple of hours before the markets close, unless I see something going on in the morning that I really want to comment on. And then maybe I kind of wrap the week like I'm doing today, a little bit earlier in the day, not knowing exactly what may happen in the last 2 to 3 hours of trading. So as of right now, there's about 3 hours of trading left in today's session. We'll see what happens, and I'll be back tomorrow to wrap up the week. Thanks, everybody. Hope you're having a great Thursday. And like I said, wrap up tomorrow for the week. Thanks. Bye-bye.